Hey traders, Raghee here, and we're going to revisit those daily time frames that we discussed just the other day as we wind down this week. And this is what I'm going to be taking into the weekend to do a little bit more homework. Now, when we do this kind of analysis, the way in which I'll start to break this down is index, sector, stock. I don't want to look at a particular stock without knowing what sector it's in or which index it's heavily weighted. Now, there are going to be stocks that are not heavily weighted within an ETF or not heavily weighted within an index, and those are uncorrelated. I will typically not focus on uncorrelated stocks. Now, there are quite a few that are popular that are, when I say uncorrelated, I mean that there's not a lot of heavy weighting of that stock within a popularly high volume traded ETF or the NASDAQ, the S&P, or the Dow. Right? There are a handful of those that are traded, but for the most part, I want that connective thread because it makes the predictability of why it would move higher or lower better. Okay, so let's take a look at the index. Let's take a look at the top of the list, the index. And we have this squat body little candle here on the Dow. Going into the weekend, it looks like the market is not willing to punch up through the higher highs, but it's not willing to punch down through the lower lows either, which probably means going into next week, we'll continue to see a little bit more. And I would call this consolidation. I mean, think about it. We've got, but for a slightly lower low, we would have had another inside day. I mean, this is just a slightly lower low. So we're really seeing a lot of compression in the Dow. Anytime I see compression in a broader market, to me, it's like a can of shaken up Coke. It is going to go eventually. Again, a slightly lower low, and it's going to be a lower close on the S&P, but we did not take out this high volatility Wednesday low. So again, compression going into early next week. I'm still going to take a look at those range highs and lows that we talked about in yesterday's video. I don't think Friday, this trading session, has really told us much. I think it's interesting that we've chosen to, in our chat room, really ignore the NASDAQ for now. It has been the hottest sector and index, meaning tech and the NASDAQ itself. And it's also where the NASDAQ whale SoftBank narrative hit the hardest. I would actually play the S&P before I play the NASDAQ. And I'll actually go cherry picking even within the NASDAQ. And what does that mean? There's three main ETFs within the NAS. XLK, which represents Apple and Microsoft. XLC, which represents Facebook and Google. And XLY, which represents Amazon. You'll see XLY clearly. XLY is the most resilient. Let me show you again. When you compare the structure of XLY to XLK, XLK has red grab candles. XLK has broken the wave. When you compare it to XLC, XLC also has a red grab candle. So if I'm going to start venturing into tech, it's going to be via the XLY. So NASDAQ then takes me to XLY. Let's take it one step further. Now what we're going to do is we're going to take a look at the heavily weighted stocks within the XLY. So this is a breakdown that I look at where I focus on the top 11 heavily weighted names within that ETF. So we look at the holdings. So in this case, Amazon accounts for about 25%, nearly 25%. It's 23 and change right now. But Amazon, Home Depot, McDonald's, Nike, you got Lowe's, Starbucks, Booking. Right now, I believe Target is just slightly more heavily weighted than TJ Maxx, and they'll go back and forth between each other in terms of weighting. Dollar General and GM, those are your top 11. Now, XLY is flirting with that wave. It's gone yellow, but it's not plotted red grab candles or a blue like the other two sectors heavily weighted within the NASDAQ have. So if I'm going to start to go cherry picking within the XLY, McDonald's actually looks good. Starbucks looks good. Nike looks good. Target and GM. The most heavily weighted, McDonald's, Nike, Starbucks. So if I want to take the very best of the XLY, that's it. And those are a lot of the names I'll look at. If I'm looking for a recovery in tech, that's where I'm going to start. And I'll do this for the Dow, breaking down the Dow into its heavily weighted sectors and then those stocks. I'll do this for the S&P as well. And this is how I'll fine tune my watch list as I go into next week. Hope that helps. Enjoy your weekend, and I'll see you next week.